this morning. Sandeep Bhatia is joining us now. He's head of equity, India and country head at Macquarie Group. Sandeep, great to have you with us here. Thank you very much for your time. Let's just start with tech since TCS has reported and we've now heard from the management. Where does that leave a potential investor at, Sandeep, in your opinion? Buy in smaller quantities in a systematic way? Is that the way to approach the space? Go on.
Yeah, I think continue to buy IT in small bites over a period of time. I think the real message to us was the fact that the US is not falling apart as much as people thought in the middle of last year. There is definitely pressure on the BFSI space that will have some impact on the IT sector. But overall, the companies are still saying that they are able to manage. I think this is one sector where valuations are still in favor of us, the investors. I would continue to buy this in small quantities. It may not be, it may not give you immediate performance in the next 2 months, but I don't expect the market to be a big outperformer this year for India. So this is good quality names which you can continue to buy.
Okay, well, let's just draw your attention to Tata Motors as well, almost 5% higher now on that stock. But remember, it's had a steep fall in the last many months. It's been a big underperformer in the auto segment, and it is now still far off from its 52-week high of 528. Just wanted your thoughts as well on this, Sandeep. Good morning and Happy New Year to you. Some of these electrification plays are doing very well now. There are some upgrades that have come through on TVS Motor. Tata Motors is having its, day out in the sun today. Do you like this entire pocket, and what do you do here?
Yes, we like Tata Motors. We like it for the India business. JLR was a big surprise, the free cash flow generation that happened in the results that just came through. So I think to that extent, JLR was the big positive surprise, which is why the stock is up. But JLR still remains the biggest challenge structurally for the business. We buy Tata Motors, we like Tata Motors essentially for the India business. One thing that I want investors to understand that as we go towards electrification, the entire automobile proposition for the buyer is changing. If you see what was unveiled in the Consumer Electronics Show in Las Vegas just last week, we saw that Sony is combining with Honda. We are hearing rumors of Apple launching cars. So essentially what is happening is the automobile is moving from focus on engines and transmission to the consumer electronics experience. And that's why we have companies like Sony and Apple coming in. Even BMW unveiled its concept vehicle, which is all about talking car, about exterior colors of the car changing. So this is a much different consumer proposition than the automobile that we currently know about and buy. Whether a JLR can actually move into that kind of a world is the big question mark. But what we definitely see is Tata Motors electrification play makes it a very dominant player, over 80% market share in the EV market in India. And that's what we like, and that's what we'll buy the stock for.
Okay, all right. Hi, Sandeep. Noted that view on Tata Motors. What about earnings? That's going to be the driver ultimately of markets. And at some point, the street was a little bit skittish whether we'll get that mid-teen growth. But what are your estimates for the coming year? Because these 2 years, FY23, FY24, were supposed to be good years, and then we take it from there. Your sense? Yeah, so our sense is we see those kind of earnings of mid-teens come through. But what we structurally like is stocks which are more domestic focused. And to that extent, definitely we have seen the markets favor M&M to some extent last year. I think this is a time to actually take a break a bit from the automobile sector and focus on other sectors which are coming through. So the big thing for this year would be actually a bit of a reset in portfolios. And to that extent, autos may just be a market performer. And earnings, mid-teens is what you're working with for FY24 as well? Not scale back a little bit? Yes, around that. So we may have to see our numbers again, but that's what we have been at.
Sandeep, what are foreign portfolio investors telling you about their intentions for allocations to India for this year, 2023, incrementally over what's happened in 22?
So what we are seeing from foreign investors is definitely a big focus on China. China is the flavor of the season, especially with the opening up which has happened. First quarter, we see flows moving towards China. We see selling come through from foreigners on India. And that's definitely one reason why the markets continue to be flattish. And at least for the first half of the year, we will definitely see reallocation. Valuations are definitely in favor of China. There's a big opening up play while we see all bad news around infections, COVID infections right now in China. That's something which investors are willing to look past and bet on the fact that China will open up majorly and definitely become back to higher growth rates by April, May, June of this year. So that's something which is why China will be the flavor of the season the first half of the year. India will definitely be impacted to that extent.
Okay, China will be the flavor of the season. I think that's the common narrative, right? Where do you see alpha generation? I know that's a very tough word these days, especially for fund managers. But where do you see the alpha in the market now? I mean, which are the pockets? Which are the sectors? Where do your own preferences lie?
Banks we have liked and we continue to like, and that's one sector where alpha can be generated. The big question will be IT. We have liked IT and we continue to back that. The numbers in the next couple of weeks that we are going to see, the next couple of days actually, will also give us some pointers, but we continue to like IT. So definitely the stocks we like are more centered on moderate valuations and earnings which are defendable. So that's where we are.
Sandeep, what about the new age themes? You were avoiding them the last time we chatted, but you were waiting for them, to indicate maybe a move towards profitability, maybe a better outlook out there. Still avoiding them, or are you giving them a second look?
No, we continue to avoid these names. Valuations are against you. Flows are anyway going to China. So to that extent, these themes have done their bit last year, and we would avoid it.
Okay, avoiding the new age themes, and that's really been, the hated sector actually of 2022. But what did well in 2022 was the PSU banking names. And I think you all were drifting towards SBI as well as BOB, the top two in PSU banking. Well, what's your sense at these valuations? Still there's comfort?
Yes, banks, we've broadly given comfort. We always have preferred large cap names. So, we like HDFC Bank and we like ICICI. So definitely those names we continue to like. But yes, even in the PSUs, the large cap names, SBI and BOB, we are going to stick with that.
Sandeep, I have to ask you maybe the first of many budget questions, but the budget, of course, is not very far away, right? Anything to your mind which kind of stands out? The thrust has been, it's interesting, right? Because last 2 years, we've seen a big upheaval in global supply chains. And the attempt here in terms of policies has been to help Indian factories get a place in these supply chains. The PLI scheme and other incentives which various sectors have received. The market also likes the idea that maybe we will see a manufacturing revival at some point. Is that something that you would watch out for? What are your thoughts?
So I think the PLI schemes are clearly something which India has made a big move on. It's still early days to say whether there's a real long-term success in terms of raising the share of manufacturing, raising the manufacturing employment which is happening in the country. But the current view is that we have seen some early signs of success. I would think that this is therefore going to continue as far as India is concerned, and we will definitely see more of this happen. The big question for India is not only the manufacturing for exports, but also the entire domestic manufacturing. And this is something which would come through for the budget. I hope we see more of that come.
Okay. Wanted your thoughts before we let you go on some more pockets. Consumption, how are you feeling about that? The growth has been slow, especially from the rural pockets, but some companies like Godrej Consumers continue to see gross margin expansion. They spoke to us yesterday and sounded, decently optimistic. What are your thoughts here?
Yeah, Godrej we also continue to like. I think it has had a bad patch and it's now coming back. So it's relative. compared to its recent past, that it's doing better. But broader consumption will still remain weak. I think we have had a slightly much warmer winter than usual till now. And that is probably an indication of the fact that the long-term climate cycle is is changing. If we don't see a great monsoon this year, which happens when we have warmer winters, then definitely agricultural output will also be weaker. So to that extent, I would be very cautious on consumer right now.
Okay, cautious on the consumer space. All right, we will leave it at that. Thanks a lot for joining in, Sandeep.